Good morning, everyone. Thank you for showing up on time and early. I think I've got the easier job on the panel, which is moderating 4 fantastic speakers. To set the context for what is happening in the consumer space in India, and to make sure that everyone in the room actually understands our perspective, what I'm going to start off with today is ask each one of the speakers. 4 of us are fund managers. One of us actually works for Tata, to share their perspective on the consumer space, starting with what they've done in the consumer space and what their entity or their fund or their business has done in the past, so that everyone in the room has some background on what they've done in the space, so that as we go forward and talk about the future, the past will have an impact on how they look at the future. So let me start with Shantanu.
Thanks, Deepak. Sure, happy to start. So our fund so far in India, there are 2 investments that we've made. One is in a fashion house called House of Anita Dongre, which has got 3 brands, and Global Desi and Anita Dongre, Bridal and Pret. And it's a multi-channel business, largely focused on women's fashion. And the second investment we recently made is more a platform investment in a restaurant chain called Absolute Barbecue, which is a barbecue buffet chain of restaurants, largely in 3 cities in the south right now, but fast expanding.
And Shantu, in terms of your stage of investment and ticket size?
Sure. Actually, our stage of investment is, I would say, late stage growth. So our sweet spot is about $150 million in any one company. But both these companies that we made investments on are actually smaller. They are more in the $50 million range of investing. And the reason really is that consumer is one area wherein once companies scale a lot, the cash flow generation is usually so good that there is typically very little need for growth capital. So this is one area that we have decided to invest a bit more early and do smaller deals as compared to our other investments in technology or financial services or healthcare for that matter.
Thank you. Rakesh.
Thanks, Deepak. So, I have been part of the investing fraternity for over 10 years before I joined Tata like a couple of months back. So as part of my investing experience with Motilal Oswal and Protera, have invested into close to about 19 consumer companies, largely into dairy, biscuits, cereals, and multi-product companies. Just to give you a background of Tata Global Beverages, not many people know that, but way back in early 2000, when Tetley was acquired by Tata, it was the largest cross-border M&A by any Indian company. And it was a LBO, one of its kind acquisition that we made. Tetley was about 2.5 times bigger than Tata Tea at that point in time. And then we acquired a coffee brand in the US called EOC, which is 8 O'Clock Coffee. Was the second largest coffee brand in the US at that time. And then we also acquired a company called Glashu, which we subsequently sold. And in the last 10 years, the company has acquired businesses in Australia, in Poland, in Czech Republic. So that's what Tata Global Beverages has done globally. But now the focus is more India. I think, so currently about 55% of our revenue comes from global operations. We would like to change it going forward and are looking at investing into various businesses in the Indian consumer landscape. So that's what the brief as far as we are concerned.
So, Gaja Capital is a Series B and Series C growth capital investor. We typically invest $20 to $25 million in return for a significant minority stake. In some cases, we also own controlling stakes in companies. We manage about $500 million under management in 3 funds. In the last 13 years, most of our investments have been in 3 sectors, of which consumer is an important and one of the largest verticals, the others being financial services and education. 2017 was a busy year for consumer. We made 2 investments. One is a restaurant chain called Massive Restaurants. They have brands like Masala Library, Code, and Farzi Cafe. We have about 20 restaurants in India with plans to grow internationally. The second investment is a design-based lifestyle brand that started off with accessories but is diversified into apparel and home segments. It's a company called Chumbak Designs. We also had one successful exit from our consumer portfolio last year, which is a company called John Distilleries, which we sold to Sazerac, which is one of the largest alcobev companies in the US. John is known for its flagship product called Original Choice, which it sells more than 10 million cases, but also is the creator of one of the fastest growing single malts from India called Paul John Single Malt. I'm happy to talk about that more as the panel progresses.
Thank you, Kabir. Chris Capital.
Great, thanks. So Chris Capital currently manages about $3 billion in assets. There are 4 key verticals. Consumer is one of them. About 10% of our capital has been deployed across consumer companies. We, in the last 3 or 4 years, have done 2 deals in consumer. One was in a company called Cavan Care, which is based in Chennai. It's a mix of FMCG, dairy, snacks, and beverages. Fabulous entrepreneur. The company did really, really well. I think from a focus perspective, we think consumer is sort of our third pillar of strength. We've done a lot in financial services and pharma. And we think consumer is something that will become very large for us over the next 5-7 years. And so I think what we've seen is consumer companies in general in India, especially on the ones which are more domestic focused with good distribution, have tended to deliver good value for us over a period of time.
Thank you. I'll just tell you a little bit about DSG Consumer Partners. I started this firm 6.5 years ago. We are a venture fund exclusively focused on consumer brands and services in India and Southeast Asia. I've got an easy job relative to the rest of them because my job is to start or invest very early in the seed and Series A, and hopefully grow the businesses to a point where someone like a Tata or a Chris or a General Atlantic or a Gaja would buy us out. So we come in very early. Our first investment is usually between 2 to 15 crores. A third of what we do is greenfield, which means the company hasn't been incorporated. They don't have a product. They have an idea. But we sit down with the promoter, write the business plan, and build a business from scratch. Just some companies where we've invested in the last 5 years is Raw Pressery, Epigamia, Chai Point, Sleepy Owl Coffee. So we like to go in very, very early. We tend to be the only investor in the seed round because it just confuses the entrepreneur when you're building a business from scratch with too many investors. And our philosophy is, we'll develop a product, do some product market testing and fit. And if it works, we then bring in all the other investors. So that's our philosophy. And a lot of it is driven by what's happening in the market, which is the larger funds and the large corporates are very keen on investing in or acquiring Indian or India-focused consumer brands, but there isn't much happening at the venture side until very recently. So that's our background. But now to the crux of the discussion today. Question number 1, and I'm happy for anyone to take this first. What sectors excite you today within the very broad consumer space? And Rakesh said at Tata, they actually looked at 90 consumer sectors to narrow it down to 6. But at each of your funds today, as you look at India 5 or 10 years out, and given the demographics of India and the changing consumer patterns, which are the sectors you think excite you and from your fund's perspective? Okay, Imran.
All right, I'll have to rely on the past and investments we've already made because, that's where we're going to go deeper over the next decade or so. We have investments, as I described, in food and beverage. We're looking at, across the spectrum on food and beverage. But what we're looking for are brands that can be, address a certain, discerning segment, emerging segment in the Indian context, but also brands that can go global. For example, Paul John Single Malt has made its mark across the world. In this calendar year, we'll sell 30,000 cases of Paul John Single Malt in 35 countries. This is nearly a third of Talisker. For any one of you who like single malt, I mean, Talisker is an iconic brand. And actually, this kind of scale hasn't been created in the last 5 years anywhere in the world in this segment. So, these are this is the kind of investments that we'd like to make, in food and beverage. Chumbak Designs and Massive and Paul John Single Malt have one common thread, which is, basically distilling the best of India and, packaging that in a way for, like I said, a discerning audience in India, but also taking them global. For example, Chumbak Design, at its heart, is really to distill a certain, Indian ethos, and packaging it in a very unique way. Massive Restaurants is exactly that. For those of you who've been to Masala Library, you'll immediately connect with what I'm saying. So that's one trend, that we are seeking to mine over the next decade. The second is, just Maslow's hierarchy. As people, experiment more with different things to do, sports, adventure, outdoor, we think there's a huge opportunity in this segment. We've invested in a company called Sports Village. We've started by acquiring customers in an inexpensive way through schools. We are in 500 schools. And we've also started engaging corporates using sporting experiences, and we're building a B2C piece to engage a larger audience with sports. We think there's a huge trend there as well. So I'd say these are the two trends in consumer that I'd like to leave behind for you.
Shantanu, General Atlantic, you guys have been doing consumer fairly recently in India, but as you look out and you've done a food and F&B platform, you've done sort of apparel, but you think of what else you've looked at over the last year, or where do you think you'll be investing money? Where do you think the market's heading for you?
Sure. In general, I think, Deepak, what excites us far more is entrepreneurs than sectors. We think in pretty much all subsectors, very smart entrepreneurs can see a consumer value proposition whose time has come. And they can see things much better than investors can, frankly. And they are the ones who then figure out the business model, can scale. And so we try and look out for these entrepreneurs who are seeing things differently. In terms of themes that we really like, that we think entrepreneurs most likely will find exciting business opportunities in, one theme clearly for us is more and more nuclear families and independent women. Who have more, who are working, who have more money to spend, who are making independent choices and are not dependent on their spouses to make decisions. And Anita Dongre is one of the investments under that theme, but there are many more, like the area of beauty, self-grooming, the area of eating out, which is where restaurants fit in, which is also linked to the same theme. The second theme is really millennials, and one interesting business that my friend runs there, not a GA investment, but a personal one, is Bira, B9 Beverages, which is a very millennial-focused beer brand, which is coming and disrupting that segment. I mean, 3-4 years ago, if you'd have thought someone would come and take on the large beer brand, you'd have said, that's not a sector that we'd want to invest in. But suddenly you have this entrepreneur who's figured out the right niche, the right value proposition, the right marketing, and is going out of this segment. So that's millennial consumption is another theme that we really like.
Fantastic. Kabir.
Yeah, so when we look at consumer, we sort of divide it into 4 areas. I think the first one is FMCG. And a lot of categories in FMCG are fairly well penetrated now. So if you look at shampoos or soaps or detergents, a little bit harder to make investments there because growth is sort of tapered off, or you don't get the 20% growth that you are sort of shooting for. But within FMCG, there are always categories that are still growing fast. So whether it's deodorants or hair color, I think beauty products and cosmetics, I think that's a space that is sort of picking up. You'll see mass consumption pick up over there. So there are sort of sub-segments within FMCG that we like, where we think growth could be a lot stronger. It's hard to find brands that have scaled up, because typically we are coming in when somebody's crossed 100 crore in revenue. So I think FMCG is one subsector with one sector with certain subsectors that interest us in a big way. On the food side, I know Imran and Shantanu have spoken a bit about it. Packaged food, I think the same point around, dual income families, women working a lot more. You're going to see people try and make their lives easier with ready-to-eat food, packaged food, more branded products, less sort of loose products. Durables. Durables is another space that we look at quite seriously. And the reason for that, again, while for all of us in this room, everyone has a washing machine and everybody has a microwave and so on, but there's a massive population still out there which is uncovered. And while it's a really competitive sector, at least we see growth over there being 18-20%. I think the last one I want to touch on is building materials. And the reason I say building materials is as the population upgrades and as home becomes, as real estate and home become more affordable for the masses, I think you will see several large brands get created within tiles, sanitary ware, the whole building materials pack, laminates, all of that we think will do pretty well. Paints is another segment which still growing double digits despite large companies already existing on that side. So I think there are themes here which will make life easier, as well as the real estate theme I'll overlay, where I feel there are people in the masses who will upgrade now to their first homes or second homes or larger homes. And you will see a lot of demand build out on that side over a period of time. So I think those are the sort of four sectors where we spend our time.
Thank you. It's very interesting. Rakesh, before I ask you to comment, the fact that the three of us who've spoken so far have such a broad difference of broad focus within the consumer sector just highlights how large, how broad and how deep the sector is. When we were asked to participate in the panel and I was asked to moderate, it was quite difficult trying to find subsectors to focus on. One of the key messages is the consumer sector is ripe. It is going to grow for decades going forward, and there's an opportunity in many themes and many sectors. Rakesh, from Tata's perspective, the whole shift from large transactions cross-border, as you said, a focus now moving towards India. If you look at India specifically, what are the sectors that excite you, and where should I be investing in so that I can come to you in 5 years and say, this is a interesting business in this space?
So, just a disclaimer that, Tata being a listed company, I can't talk about our future plans so much. But let me just share with you my learning in the last, 2-3 years when I looked at various sectors in the consumer space. Before Tata, we invested in a company called Future Consumer, which claims itself to be FMCG too, and in that process we looked at various sectors and various themes. I think 3 large themes that came out of our study was one, this entire shift from unorganized to organized. You'll be surprised to know the segments, which are of daily consumption and the kind of size that is still unorganized. Just to give you a sense, if you look at dairy, dairy is a 5.5 lakh crore industry. It is larger than rice, wheat and pulses taken together. But only 22% of that is today organized, which is about 1,10,000 crores. And there is one big daddy, which is Amul, which is about 38,000 crores in revenues, which is almost 40% of the market. The largest private sector dairy in dairy today is about 4,500 crores, which is about 4% market share. And the entire segment is growing at 17% year on year. So the organized segment of dairy itself is adding about 18,000 crores of value every year, which could be a summation of various other consumer categories taken together. So the opportunity is so large. The question is, how do you capture it? So I think that's a big theme that has come out of our study. The second big theme that came was Desi is cool. We talk about modern packaged Western products coming to India and everybody is consuming it. But you realize finally that end of the day, I would like to eat my own gatia, my own sev, my own theplas and my own stuff. So you might have a Kellogg cereal in the morning, but end of the day, you will get satisfied when you have your own stuff, your own food. That was another huge opportunity that came by. And if you look at players like Paperboard and all of that, they were going back to nostalgia. They're talking about Desi drinks and all of that. So that was another huge theme that came out. The third very interesting theme that came out was good for you, better for you. So everybody now wants to have better products, products with lesser oil, products with sunflower oil, products which has got health connotations. I think that's another large category that is emerging. And there are various facets of that particular category. You will have basic staples with fortified atta. People talking about fortified atta. People talking about multigrain atta. Their gluten-free food is a big thing. So the entire health segment as large is again a large segment. And you will have sub-segments into it. So you will have baby care. You will have, another category that we looked at and was surprised to see was entire Ayurveda. Where you're talking about bone health, you're talking about diabetes health. People are now becoming more and more health conscious, and they don't want to take curative medicines, but they want to take more precautionary medicines. That's another segment we think is very large and set to grow in India.
When we were in the huddle before we came up, and we all agreed that the single largest challenge for a new consumer product is distribution. You got to conceive a product, manufacture the product. But given the size of India and the challenges within the distribution system, that's the single largest hurdle. And I'm going to ask Rakesh to comment first. Given the size, breadth, and reach of someone like a Tata, who have already access to multiple points of sale, I mean, what's your perspective on how new brands reach the customer? And how can a large entity like a Tata not only help them get there, but capture value in the process, whether it's using the distribution or investing in them early or doing something which if you think what Unilever has done abroad with a very aggressive both investment and acquisition strategy to leverage that platform. But I haven't seen that happen in India yet. And Tata is probably amongst the top 2 or 3 companies who could do that if they wanted to.
Absolutely. I think it's absolutely true what you just mentioned. India is not a country, but it's a continent. There are like 29 countries in this country. The kind of population that we have, the kind of taste preferences, every region has its own category of consumers. And if you look at the penetration today, the modern retail is still 6-7%. It's largely GT that drives the trade. And it's difficult because the margin structure when it comes to GT is very, very, inversely proportional. The kind of margins that the retailer makes is far more than you as a manufacturer will ever make. So I think it's important that there has to be a distribution for you. If you look at our group, we have an access to close to 4 million outlets. By far the largest reach in we have some 800 million customers across various products that we sell. But one thing which has changed dramatically in the country in the last 1 year is GST. I think that is one tectonic shift that has happened, where this entire concept of having multiple depots and multiple distribution centers is no more in existence. And at the same time, your logistics, the backup logistics has also improved thanks to, the entire PE world which has invested into various logistics companies today. If you look at dairy, for example, there wouldn't exist a cold chain earlier. So if I had to sell milk is a category, is a product that gets, stale in less than 24 hours. And there was not enough cold chain today. Now you have technology where you can increase the shelf life to 3-4 days. So what is happening is, one, there are impediments which were there are now being removed by various reforms that has happened in the country. The back end, the infrastructure is improved. Plus, you have technology, the entire digital technology. The cost of advertising is somewhere coming down because people have an access to social network. And that's where we see brands like Abira or a paperboard becoming a pan-India brand in a much shorter time. So I think that is a shift that is happening. And we as a group would like to take maximum advantage of that, and the ability for a large distribution house to bring the product. That's the value add, essentially, that what we are offering to companies that we would like to partner with. Because, if you might have a great product, as you rightly mentioned, but it has to reach the consumer at the right time. And that's what we would like to achieve.
Let's talk a little bit about exits, right? All of us, other than Rakesh, he is one of the exit options. Us as fund managers, at the time of investment, we do a lot of work on the product, the entrepreneur, diligence, and then we spend a lot more time on, if I invest today, who's going to buy it off me? I guess I have the easiest job because I go in very early. I have the easiest one because my view is someone like you guys will buy it off me. But having said that, the journey for building a brand is long and tedious. I mean, the first consumer investment I made in India was in 2004 in Sula Wines, when it was a tiny company. I only exited last year. So that's a 13-year hold. Fortunately, my structure was such that I had the luxury of holding for 13 years. Many funds don't have the luxury of holding for 13 years. So as you think about your point of entry and the size you're entering at, is it a M&A, is it a strategic, or do you see this going public? And I think that's going to be very important as we think about our investment strategy. Kabir, let me start with you.
Sure. I think this is one of the sectors where exit is very easy. I've been doing this for 15 years now. It's probably the easiest sector to make exits in. And the reason is the appetite for consumer assets is very strong. You may disagree on valuation here and there. That's a separate issue. But the exitability of an asset, whether it's got brand value, distribution, regional value, the private equity space to sell to them is fairly hot. You can sell to another PE fund. The IPO appreciation for consumer assets is tremendous at this moment. And I don't see that changing. It's not going to change in the next 10, 15 years in my mind. I think you will still see any brand which is sort of built well, people have invested behind it, has some niche, will be an exitable asset, whether it's to some of the foreign corporates or even the Indian corporates are fairly excited about doing more in consumer. So I think all avenues are open for you, whether it's PE to PE or it's a strategic exit or an IPO. And I think the appreciation for these assets will also be fairly good. So it's not really a challenge in my mind in this space.
Imran, do you agree?
I partly agree. And maybe it's about, picking the right risk reward. Last year we had 3 IPOs, 3 back-to-back IPOs and 1 strategic exit. So, we've had exits. IPO markets tend to be, it's like an elevator door, right? So when it's open, there's a rush of high, good quality assets. And yes, exits seem easy. But, you need to time it. IPO markets haven't been like this for long. Strategic exits is a very bespoke process, as we learned in our recent exit of John Distilleries to Sazerac. It's a long drawn process. And ultimately, nothing sells like EBITDA. You can have the best product portfolio, you can have excellent governance, a great promoter, but it's only when you really show EBITDA and EBITDA growth that you generate a level of interest that gets an exit done. And fortunately for us in this case, there was a combination of someone who wanted a piece of India and the fundamentals were strong and there was a great story.
But in this particular case, you said you did run a dual process, which was were you looking for a exit which was a trade sale?
No, that's absolutely right. And so largely because of the sentiment that we carry, we don't, we ran a dual process and you can't bet on an exit. So you've got to try. It puts a lot of pressure on the CFO's office in our companies. It creates a degree of confusion and complexity when you're running a dual track like this. But it was important, we thought. It's just mere probability. If you want to improve the odds of a successful exit, you've got to first have a clear thesis on entry, which is what you're alluding to. But also at the time of exit, you have to have a few balls in the air. And then you have a favorable outcome. In this case of John Distilleries, we were lucky. I think we could have made more money in an IPO, given where IPO markets are today and the scarcity of an asset like this. But we found a great partner for Paul. Yeah. And it's a game changer for John Distilleries in the Indian context and for Paul John Single Malt globally. So, it was, I think, a fortunate outcome that we got a great partner for Paul and the company and we got a favorable outcome.
Good. Shantanu, from your perspective, as I know you guys are fairly new in the consumer space in India, but how do you see this playing out at your size of transaction?
Sure. Actually, not much more to add to what Kabir and Imran already mentioned. I completely agree with their thoughts. For product companies, 1 or 2 points I'd like to add is for product companies, when you're thinking about a strategic exit, you have to think about, I think, one of 2 kind of buyers. One, if there's a buyer coming from outside, like in the case of John Distilleries, a lot of them are actually coming not to typically buy the brand, but to buy the distribution in India. So you've got to be very, very clear that is your distribution after your term horizon going to be of strategic value. If it's going to be a domestic buyer, you've got to be clear that the typical buyer set has some at least companies who pay up to buy these assets and that your product will fit beautifully in their existing distribution, because a lot of domestic buyers, like, for example, Jyoti acquiring Henkel, was all about the Henkel products just naturally go into a lot of Jyoti's distribution. So I think those are the two strategic exit considerations. On the IPO bit, I think it's a bit easier for us because we go into more late-stage companies, so that option always exists.
Rakesh, as we think about M&A and the potential for Indian MNCs to actually acquire either small, medium-sized or large companies, we haven't seen that much in the consumer space. We have done, Imami's done a few, Tata's done a few, but it's not at the scale that we've seen in the US or Europe or even in Singapore, where it's a core part of an MNC strategy. Think of Unilever, think of Nestle, where they acquire between 1 to 2 companies a month. Yeah. They know what they do. They know they need to grow. But if you go to the board meetings, the M&A team is a core pillar in the business, right, along with R&D and along with distribution. Do you see that playing? Do you see that playbook happening in India? I know you can't share Tata's perspective, but will that happen? Because that will have a huge impact on the number of entrepreneurs entering the market, yeah, and then selling out.
I think what you mentioned is absolutely correct. So let me just give you an example. So if you look at Hindustan Lever, they acquired a brand called Indulekha, which is again Desi. That's what I was trying to say, that Desi is cool, and a Lever brand buying a 100-year-old brand, Indulekha, and they now it's like a main category for them. And same with Imami buying Jandu and Kesh King and XYZ. I think the biggest challenge that I perceive when it's the corporates buying out brands in India is the valuation. The challenge is somewhere because of the public markets and the perception. The EV by EBITDA has now become EV by sales. Now the challenge is when you are in a corporate world, you have to justify your returns in a particular period of time because you're a listed entity and people ask you questions that, okay, how come you're paying 10x of the revenues, And I think that's one of the biggest impediment. The problem is, the entrepreneur or the investor in these smaller companies have to realize that what they can unleash by getting a new home like, Tata or a Lever or a Marico can change the destiny of that company forever. Today you're looking at a company which is 50 crores revenue. It can actually become a 5,000 crore company. And as you rightly mentioned, the biggest impediment is distribution. The moment you get into one of these large companies, and there could be a huge explosion. So I think there are structures being found. People are looking at structure, and I think if you have a currency for a listed company, you have a currency. You couldn't have swapped it, and that's what Future Group has done very interestingly. If you look at them, what they did is they went and acquired Heritage food business, knowing very, very, very well that it's a known core. And in terms of currency, they gave their own stock, and they also did the same with Hypercity. And they're doing it with each and every company and each and every brand that they're acquiring. So, and the deal is, it's a pan-India distribution that you are getting in return. So I think you will see a lot of M&A happening in that space, and precisely that's the reason why, most of the companies today are very, very actively looking at newer brands and newer categories.
I think that's interesting, and I think the more we see this happening within the Indian ecosystem, because one of the things I've been hearing over the last 10 years of doing consumer is, most early stage guys don't do consumer non-tech because the exit opportunities are tough. They know that there's a lot of demand later stage, but to get to 100 or 200 crores sometimes depending on where you are, takes a decade. Many entrepreneurs just don't have the...
Yeah. I'll give you a very interesting example. I think you rightly put. So if you look at Carrot Lane, was an online jewelry company and was the largest online jewelry company in the country. And then Titan went and acquired 60% of the company. So now it is Carrot Lane by Tanishq. You'll be surprised to know in last 1 year, the revenues of the company has gone 6x.
I'm not surprised. That's the power.
The reason why, because the goodwill, the credibility of the brand of like Tanishq, resonates in a very different way to the consumer. And it can actually create wonder. That's something which I think the new age entrepreneurs, the new age product guys need to understand. And I think the more faster they understand, the better it is for them. And you will see those kind of transactions, coming forward very soon. That's what I think.
Okay, we've got 25 minutes left. I'm going to open it up to Q&A in a while. But I think what I'm going to ask every one of you is, making consumer investments, especially early stage and even in the later stages, is not easy because it's not only about the product, it's about consumer behavior. When I invest and look at Sula Wines or Viva or Epigamia rolls on the panel later, when he was trying to convince any investor that we're going to launch a branded dahi in a country where everyone makes dahi at home and where Destillate, Danone, Amul and Misty Milk is already in the shelf, it's not an easy sell, right? So we had to craft a story, not we, he crafted a story, made an amazing product, and then brought it to the market. So I want to set the context to that. If you had to invest in two brands, either in a personal capacity or as a fund, because the size and scale are different, with a 10-year view, which are not in your portfolio, so don't take anything in your portfolio, just name me two companies or two brands, you may not know anything about the financials, that you think within the Indian context is very placed to be around and grow over the next decade in any consumer's category.
I'm going to borrow from, I think, what Kabir, one of the themes Kabir spoke about, which was good for you. No, I think you spoke about it, good for you, yeah. I think there, the brand I love is, which still has a lot of legs of growth, is Himalaya. It's a great business, and it can keep growing for a very long time. And I'll add probably one more to the same.
It doesn't have to be buyable, but
I thought you're the M&A head of a listed company, so.
No, I'm saying what he asked is that where you would put your money. So you can't put money in Himalaya today.
No, it's fine. It's fine that you can't put money in. Which are the brands you think will have growth over the next decade? Exactly. The fact that you can't buy it is...
Exactly. If you could own, what would you? And maybe I'll add one more to this, which is the whole Amway Nutraceuticals portfolio in the country, which is Nutrilite, Plus. I think that again is those are probably two of my favorites that I'd like to invest in.
Rakesh?
So I would like to invest in a baby care company. So I think if you look at the baby care space, we are a country of 1.2 billion people, and our population growth is about 1.5-2% year on year, and everybody wants to spend on his or her child, and there is only one brand in the country called Johnson & Johnson. And every time anybody travels abroad, the first thing that he buys is basically something or other for the child, because he feels that something that I buy from Western countries is better and you don't get that in India. I think if somebody can create an Indian brand with Indianness, the Ayurveda or the good for you for children, I think that's going to be a huge category.
Do you have a brand in mind or not? Or is it safe?
I'm going to create one. So I'm already working on it. I can't name it. But that's one category that I would love to invest.
Okay, just give us, for the second one, give us a brand.
Second one, give us a brand. Maybe so there is a brand called Kama, for example, which is again, we have an investor sitting here in our crowd. So that is another category that I would like to invest in, because again it's about Indianness, Ayurveda, and great product, the sensories and the feel of the product, the varieties that you can do. I think those are the two.
I think Kama is a great brand, and it's got a long way to go. Yeah. Imran.
So Deepak, I'll have to play safe here. I can't give up my pipeline, but I have to say the two themes that I started out with. I think those are the themes we tend to invest with a very long-term view. And if you look at the investments we made in the past, sports, outdoor sports, adventure, I think is a theme we're going to mine for the next decade or more. And there's some very cool companies and brands that are being built there.
Name one which is not in your pipeline. Every brand is in your pipeline.
I know you need, I know there's an element of, provoking me to get one out. I won't be able to. But the other okay. Trend, and I'll stick with trends if that's okay, Deepak. The other trend is, what you call Desi is cool and what we call bottling India for the world. I think there's some exceptionally cool brands that are getting built around that. Chumbak and Massive and Paul John Single Malt are just examples, but they're, a lot of them.
You're hedging. You're the only one who's not mentioning one brand. Just take something which you will never invest in, but you think is a great brand.
So let me go out there. Just take Deepak's portfolio, and there's we love a lot of those brands, by the way, Deepak, and we've invested with you in a few.
Thank you. Kabir, I want two brands.
So I think for me as well, the theme would be something to do with India specifically. So I think, we've already spoken a little bit about Bira, but I think that would be something interesting. Just an Indian beer brand with a differential positioning, has a nice sort of overlay of premium and regular products. You see it all around you. I mean, you see all your friends consuming it. Something different about it. It has an edge to it. There's a little bit of, nationalistic pride around it. A lot of people want to try it. A lot of people keep coming back and having it. So I think that one has a sort of long future ahead of it. The other one was, I had Himalaya in mind, but I'll skip that one. Something we had looked at in the past was Fab India. I think we, had seen it 4 or 5 years ago, and that has done really well. There's an element of Indianness to it again. Lifestyle products, India-focused products, has a different positioning, just a different kind of consumer across both apparel, house. So it's grown. It also has organic India in there now. So there's a little bit of the health and wellness platform built in over there as well. So I think I would say these are the two, aside of Himalaya, which would have been interesting for us.
Okay, so I'll give you two of my view. The themes are the same, and I'm very happy to go into my pipeline. If anyone wants to write a 2 crore check, please do, because most of my companies aren't raising that much money. I think one brand that has really excited me over the last year is a brand called Napa Dori. It's a luxury brand, very Indian. You have Master G making bespoke leather product. The detailing is fantastic. I think what's going to happen in India over the next 10 years, the people who are buying Louis Vuitton, Hermes, and Bertulli want to buy India. Half the products are made in India, exported anyway. So there's going to be a large number of brands, and Napa Dori is one of them. I think it's got every element to make it Indian, and it's got every element to make it global. So that's one brand that really excites me. The second brand is, again, a very tiny company. I think the sales are they're only 3 months old. And again, it's focused on the baby segment. So I've been focused on the baby and mother segment for the last 3 years. Our last 3 investments as a fund have all been baby and mother. This one is a baby snack company called Mum Co. It's, I think, 3 months old. It's only in, I don't know how many, maybe 50 stores. Great entrepreneur, but more important, great product and great segment. Because if you actually walk into a supermarket in London or Singapore, or Malaysia or Bangkok, there are 3 shelves, 8 aisles, so 24 shelves of baby products. You go to India, there are none other than diaper. It's ridiculous. In a country with our demographics, not to have a shop with a shelf for baby products, it's ridiculous. So you're going to see a large number of brands within every segment of baby. Many of which will be local. And Mum Co is one that I found, which is, I think, a fantastic product, and I would love to invest in it. Thank you. Rakesh, Kabir, Shantanu, Imran, thank you very much, and thank you to the audience.